2020, and let's go over some news updates that have been happening this week in Bitcoin, but I'll also cover some updates from last week in Bitcoin. Apologize about the delay on last week's update. We've been working pretty hard here at Adoption to get our platform and our website up and running to get more Bitcoin tutorials for you folks and to also help produce more Bitcoin educational content for you. If you want to subscribe to get more of these Bitcoin education emails and also Bitcoin tutorials, please head over to adoption.io. Check out the new website. We've got a tutorial up there right now on how to buy Bitcoin through Kraken, and we'll have more coming your way here in the short time frame. Great. So as we start typically with each week, let's go to the charts. All right, great everyone. So today's date again is September 13th, and Bitcoin's price is currently trading at $10,324. What's going on this week? So the first news update that I would like to cover is CNBC's edition. Finally, mainstream media has pulled out the truth, and they're starting to inform the audience and the general public in the United States that the US dollar could be in a decade-long decline. Now, this is something that many of us in the crypto space have known about this. Many Austrian economists and many bright-minded people have been talking about the risk of the dollar for quite a while now in past years, but leading up into fall of 2019 and of course coming into January, February of 2020, we saw the start of inflation by the Fed last September of 2019. That occurred in the repo markets, so in the overnight lending markets between the bank, the interest rate spiked up to, I believe it was 4% plus, the most it had ever done in one period. And the Fed intervened last September by starting to print about $100 billion a day to supply to the overnight lending markets, the overnight repo markets for the banks. Now here we have it. It's finally hit mainstream news. Here we have Jerome Powell going into 2020 informing us now in light of COVID-19 and of course the broader global economy. The Fed is not going to stop inflation here in the United States. They're going to increase inflation because they need to. And that's because monetary policy this time around will no longer work. Interest rates are at or near zero everywhere else around the world. They're actually negative interest rates everywhere else in the world. The United States is the last country to have positive interest rates. And because our interest rates are so low, there's no wiggle room for this crisis that we're seeing right now. Therefore, we continue to see lowering rates in the U.S., higher inflation in the actual currency, that being the U.S. dollar, and then what looks like deflation in the credit markets and bankruptcies as they continue with many of the businesses in the United States and many other businesses around the world. So that is in light of our next article that I'd like to cover from Zero Hedge. So now the Fed now owns a total of 22,913 different securities. According to Bloomberg, it is the world's biggest investor. What does this mean? This means that the Fed has now started to purchase securities and corporate bonds. So we had seen the Fed about a month to a month and a half ago start to step in and purchasing junk bonds, junk corporate bonds. This is significant because now that the Federal Reserve Bank is starting to purchase corporate bonds, we believe next they'll be leading to purchasing U.S.-based securities. And as we all know from history, when the Federal Reserve or a government entity, of course the Federal Reserve is not a government entity, it's a private bank that lends to the government, but of course is aligned with the government through a lot of the people that they hire and promote through the revolving door from DC to the Federal Reserve Bank back to DC. So as the Fed continues to purchase these corporate bonds and securities, we'll start to see the U.S. stock market become nationalized as the Fed continues to purchase these securities and these bonds in a response to the economic crisis. We will begin to see the market become more nationalized. This is something that we've seen around the world. It's been happening in China, of course, as a communist government, but there's been a higher ramp up in the nationalizing of a lot of their industry over the last couple of years. And we're also seeing that in Europe and the European Union. I don't expect that this is going to stop until people are back at work, until people are starting to get paid, and until a lot of this inflation stops, which it's not looking like it will now. Jerome Powell's made that very clear. I expect that the U.S. markets will continue to become more nationalized as the crisis continues to unfold and companies are in need of more liquidity to prevent bankruptcy. Now, this is all on at the same time. This is going on as Jack Dorsey, who's the CEO of Twitter, tells Reuters that Bitcoin is still the most viable internet native currency. Jack Dorsey, of course, has been a large supporter of Bitcoin for several years now. He also owns Square, payments processing, and the Cash App. The Cash App was one of the first pieces of mainstream software that millennials are using as a payments network to integrate Bitcoin payments and Bitcoin purchases and sales into their actual application. Jack Dorsey has made it very clear from the start that he believes that the internet deserves a native currency and that Bitcoin is that native currency that will be adopted by the masses, that will be adopted by central banks, that will be adopted by governments and individuals, and it will be the native currency for the internet. This is why Jack Dorsey and Square and also Twitter and Cash App has primarily focused on Bitcoin as the currency for integration and not any other currencies, because of his belief that Bitcoin is the first, it's the strongest, it's the most adopted, and it is the currency that will belong online, native to the internet, for the internet. This is significant because of what we're seeing on the larger macro picture of what I just talked about with risk to the dollar now. Many people have made it very clear that they are no longer have trust in the US dollar. The value of the dollar going forward is going to lose more value than it's ever lost in the past. We've seen this most recently from Warren Buffett about 2 weeks ago, announcing that he has dropped much of his shares, many of his shares in JP Morgan and a lot of the Wells Fargo, a lot of the banking stocks. He has also purchased Barrick Gold, which is a gold miner. So what Warren Buffett has essentially said is that he does not have faith in the risk in the dollar. He does not see value in U.S. equities going forward, the U.S. stock market, and he's purchasing a gold mining company because as we start to see the U.S. dollar go the way of Zimbabwe and Venezuela and these other currencies that hyperinflate, people will flock to alternative assets to try to save whatever wealth they have, that being gold, silver, Bitcoin, and digital currencies, because the dollar will lose value faster than it's ever lost before. And the masses should take note of this and start preparing your own assets for this transition of wealth that's going to happen, but also prepare to safeguard any type of retirement savings you've had, any type of savings in general in cash. Start looking for alternatives because the wave is coming. The smartest minds out there are telling us this, but of course, you're not going to see it until its last minute as a mainstream investor, because by the time it hits CNBC, by the time it hits Fox, by the time it hits NBC, it's already too late. Now, this also points us into one of the next overall macro situations that we're seeing, which is the IMF now starting to roll out and introduce cryptocurrency educational videos. Samson Mow is the CEO of Blockstream. Blockstream being one of the largest Bitcoin-based companies who focus on launching Bitcoin satellites in space, creating Bitcoin wallets for people, and helping with Bitcoin adoption. Samson says, there are many things wrong with this IMF news video on so many levels. It mainly focuses payments issues and conflates certain properties of Bitcoin with all cryptocurrencies. It sounds like they're gaslighting the general populace to prepare them for an IMF coin. Now, as we've talked about in this show, and as I've talked about for quite a while now, as the dollar inflates away, as the dollar ends its stance as a reserve currency of the world, many countries will be looking to transition into the next reserve currency. The dollar's stance as a world reserve currency has really been around for a while. Many believe it was cemented in, and it was cemented in Bretton Woods in 1944. Reserve currencies only last anywhere from 80 to 120 years historically. So right now in 2020, we're approaching that 80 to 90 year window where transition onto a new reserve currency and typically to a new world power will start to take place. The currency race is now on with countries around the world. The IMF, which is the International Monetary Fund, the way banking works around the world is you have your banks like you see here in the US, your JP Morgans, your Wells Fargos, your TD Ameritrades. Up from them, they're central banks. Up from the central banks is the World Bank, and then from the World Bank is the IMF. So what the IMF is now preparing to do, and what they're doing, is they're teaching the public about cryptocurrencies, what they're calling cryptocurrencies. They're doing this because the Federal Reserve Bank in the United States and other central banks around the world, including China, are creating digital currencies. They are creating a digital central bank currency. They're doing this because the dollar is about to end its stance as a currency, and we need to transition onto another currency. So the US is racing as fast as they can right now as we speak to create a digital dollar. China has already developed a digital yuan, which they're getting ready to launch as we speak right now. This is the currency race of our time. This is the currency race that will last and will be cemented in for the next 80 to 100 years. And this is also a larger macro race. The nation historically that has held the reserve currency has been the world power. So what we're seeing now is the IMF preparing the audience, trying to teach them about cryptocurrencies, because the next phase will be the rollout of central bank currencies, digital currencies created by the central banks, created by the governments, that they will force all of us to use when the dollar starts to fail and the transition happens. What you need to know while you're watching these upcoming videos from the IMF, from the Federal Reserve Bank, is that a cryptocurrency, like they're saying, is not just the USDC or the US dollar cryptocurrency. It's not just the digital yuan cryptocurrency. In my mind, a cryptocurrency is a decentralized currency like Bitcoin. Bitcoin is not owned by one bank. It's not owned by one government. It's not owned by one company. It is decentralized in nature. No one owns and controls it. It's also censorship resistance. What does that mean? That means that no one can censor a payment. I can send a Bitcoin transaction from me to you anywhere around the world, and there is no one entity that can censor that. Bitcoin also has a fixed supply at 21 million whole Bitcoin that will ever exist in history. Now, what the IMF and what the central banks are going to try to teach people are that their currencies are cryptocurrencies, and that their currencies are the only cryptocurrencies that people should be using. It's you as the user that need to know that there are going to be alternatives to what you're going to be told by the Fed and by the central banks and the IMF. You still have the option and the privilege of using Bitcoin, Monero, or other digital currencies as alternatives to these censor coins. These currencies that are launched by the IMF, by the Federal Reserve Bank, will be no different than they are today. They will not have a fixed cap, which means inflation can happen a lot faster and a lot easier. And unfortunately, we'll probably see some type of totalitarian tools rolled out like that. So what does that mean for you? You just have to understand that the Fed and China and many of these countries right now are racing to get their digital currencies launched. Please be aware that you're going to see many videos coming up trying to teach you about what digital currencies and cryptocurrencies are. But since you're following us here at Adoption, you're well aware and you're well caught up on what Bitcoin is, why it's different than what they're going to create, and why you should be using it instead of their dollar. And the last thing that we can cover here is exactly what I said. So China moves away from the dollar ahead of the digital yuan. This is a Zero Hedge article that was posted about this. And then, of course, for my finance people, NASDAQ put out an article not too long ago. Programmable digital currencies are coming. Here's what that means. This was published on August 18, 2020. I reported on an article that the IMF wrote last year instructing central banks, how they can manage negative interest rates and how they can make this work. I posted a video on that. You can go to the Adoption YouTube channel and look back in March. But essentially what they said is that they're going to create two forms of money: physical cash and e-money. The physical cash is going to be taxed at the negative interest rate in the conversion to e-money. So what that means is that if you hold cash, as time goes on, when you exchange it back into your ATM or you exchange it back into the bank for this e-money, you're going to be taxed on that, a higher rate year over year over year. And what this does is it disincentivizes the holding of that currency, and it incentivizes the transition of physical money into electronic money. And it looks like now that they're getting ready to roll out these digital currencies, central bank digital currencies, that could be a way that things progress forward. One of the things that I see going forward happening, it's been talked about a lot by Simon Dixon. If you don't know who Simon Dixon is, one of the leading bankers in the world, also has created Bank to the Future. I encourage you to look him up on YouTube. But we're going to be looking at potentially the Federal Reserve letting banking institutions fail during this upcoming collapse. So we could see in the near future here banking institutions that you've seen in the past that have always been around that are allowed to fail, and then the Fed will roll out their digital currency wallet, and then along with them nationalizing the stock market, they'll then bring in regular retail clients, and they'll actually offer us bank accounts with the Fed instead of with the actual regular commercial banks like we see today. So that's it. We're going to have to see going forward what happens. This is a very exciting time in finance. This is a very exciting time to be a young person. If you're someone that's sitting out there right now and really worrying, please be aware that there are alternatives to this current financial system, Bitcoin being one of them, as an insurance policy and a hedge against inflation, and what looks like is the inevitable that's coming. Thank you again, everyone, for listening to This Week in Bitcoin. Again, if you want to learn more about Bitcoin, you can head to adoption.io or adoptbitcoin.com. And this is our website where we show you how to buy Bitcoin, how to use Bitcoin, and we provide more of this awesome educational content to you. Thank you so much, everyone. I hope you have a wonderful week. I hope you have a wonderful weekend. Take care, and I'll talk to you soon. Bye, all.